Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second indecisive spinning top pattern on Friday as the market hesitates once again around the old November 2020 low at 116.02. Overall, we'll still seem to be within the breakdown from the recent cat's ears pattern. That's over the July to date period. Now, in this particular instance of the pattern, I've been taking a combination of 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94 and the neckline, currently 116.84, of the August to September 2020 head and shoulders top as the break area. Last week's action was mainly a recovery of sorts, though this obviously looked like it had run out of steam by last Thursday. Anyway, back to the cat's ears pattern. On this pattern, we could see a potential move down to target X in the 114.5 area. This all comes in the shadow of last month's monthly key reversal down. Now, looking more at a bigger picture, we still are moving nicely down in between the upper time, currently 117.91, and the middle time, currently 114.21, of the January to May bearish Andrews pitchfork, which has run the whole of 2021's action so far. So far today, a slightly lower open with a test up to the November 2020 low before falling away down to hold at the 2019 high at 115.70. We don't really have that much support below this bar the low of last week at 115.23 until the 50% Fibonacci line of the March 2020 to January 2021 move at 114.92. Cable, aka sterling against the US dollar. A third bullish white soldier on Friday, and the first one to close up and over both the declining short medium moving average, currently at 137.27, and the upper time, currently 136.82, of the late July to mid-September bearish Andrews pitchfork. It was also another move back within the broken recent sideways triangle, formed from late July downtrend, currently at 138.61, and the mid-July uptrend, currently at 136.58. This pullback up now not only threatens both these patterns but also the targets below for them for the sideways triangle, namely initial target in the X in the 134.90 area and a secondary target X1 in the 132.65 area. Now, we'd already managed to achieve target X, and as you'd expect, the secondary target is harder to reach, so perhaps that may have been enough. Well, we'll see. Finally, I've droned on interminably about the longer term whole of the 2021 action double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the earlier significant move down had revitalized the idea enough that I had placed some potential targets for this pattern. Initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. With this move higher, this pattern is now also under threat. The next overhead resistances are the declining medium moving average, currently at 138.09, and the flatlining long moving average, currently 138.47. So far today, a steady open and then a move back down, but only as far as the short medium moving average, and that's currently at 137.27. Euro sterling. A bearish long black Mariposa on Friday, after some earlier hesitation from midweek, finally gave way. It was the lowest low and low close since February 2020. Perhaps most importantly, it was also a clear move and close below the March low at 84.70. This reignites the idea, after some doubts, of the most recent pattern being a large right-angled broadening formation, formed since late May. The pattern is made up from the flat April 2020 low at 86.69 and the lower channel line, currently 83.33, of the broken May to August bear channel. Now, speaking of this bear channel, the market halted at the upper channel line, currently 84.28, or should say the broken upper channel line. Beyond this, there doesn't seem to be that much support until some congestion from February 2020 in the 83.35 area. So far today, a slightly lower open, but a muted attempt lower, as if the market is finding it hard to push down through the broken upper bear channel line. US dollar against the Indian rupee. A small bullish white soldier on Friday, though personally I think it might call it an indecisive spinning top. The reason why? Well, it would make the action from last Thursday until and including today a possible 3-day bullish morning star pattern. However, you might be right if you accuse me of trying to fit the patterns into my own narrative. Yeah, you might be. Overall, well, we're still above the downtrend and trendline combination of the April 2020 to date move, currently at 74.47, which makes up the large April 2020 to date sideways triangle. This gives an initial target topside in the 76.36 area and a secondary target in the 77.79 area. Obviously, the secondary target will be harder to achieve. This, of course, assumes that the current break higher is not a false break. So far today, a potential bullish opening long white Mariposa. This adds weight to the idea that the last 3 days may have been forming a possible bullish morning star pattern. Right now we're testing again the August 2020 high at 75.31. US dollar against the Brazilian real. On the surface you could look at Friday's action as a bearish opening black Mariposa, which would be fine. However, I suspect the action may be a possibly quite potent bearish belt hold pattern, in which case watch out. Overhead we still have the two lesser Fibonacci levels at 550.12 and 552.91, but the main resistance will be the upper time, currently 561.69 of the recent July to late August bullish shift pitchfork. Meanwhile below we have two 50% Fibonacci line supports, the May to June 2020 move at 539.28 and the 2021 move so far at 538.46. Plus, before then, the rising middle time, currently at 542.36. Please continue to keep an eye on this bullish shift pitchfork as it has performed so well, especially the middle time. This pitchfork is the indicator for the gentle bullish incentive that has been evident here since the end of August. US dollar against the Mexican peso. After reaching up early last week and achieving the initial target X in the 2089.30 area for the June to date descending triangle pattern, the market turned rapidly and significantly lower, and with Friday's large bearish engulfing pattern, the market had made a weekly key reversal down for last week. As you can imagine, this very much threatens the whole secondary target X1 in the 21-23.5 area for the descending triangle pattern. So far today, a reactionary move higher, with what looks right now like a possible immediate countering bullish piercing line pattern. Below we have the top of the trend line of the descending triangle pattern, currently at 20.1974, with just below that the recently golden crossed short medium moving average, currently 20.1749, and the long moving average, currently 20.1547. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.